We came into the year very bullish on Tesla. We named it our top pick. We thought it would have a impressive bounce back after disappointing performance last year, and that has really played out. We took our rating from strong buy to buy a few weeks ago, just on valuation. Obviously, the stock price has more than doubled year to date. We do see some upside still from here, but we think the lion's share of the move has happened so far this year. So the basis of our price target is 42.5 times our 2025 EPS estimate, which gets to a price target of $310.
Tesla is a company filled with innovation and diversity. The range of products has been widely accepted by society. This caused investors to be excited for its future. One particular analyst and investor, Dan Ives, has shared his opinion about Tesla. Welcome to Prima Invest.
Let's bring in Dan Ives, of course, of Wedbush Securities, a frequent guest for that seat right there. Love the green pants.
Thank you.
Sorry we can't get those fully on camera. But let's start off with what you've been talking about. You've been very bullish on Tesla. You've been right, Dan. What do you make of the deliveries?
I think this was it was a jaw dropper relative to many expecting softness. I think those price cuts, that was the poker move that they really needed to make to put an iron fence around their install base. China, I think that's really ultimately the catalyst. And this for the bulls, I think this is really an inflection point. It feels like right now they're just getting stronger. And in terms of electric vehicles, it's Tesla's world. Everyone else paying rent.
But, the point Mike and Phil both made is we're still really at 1.8 million for the year, which is where we started. Estimates for the company have actually come down. So has this actually been the reason the stock has added, or the company's added $400 billion in market cap? And if not, what then, and is it justified?
Yeah, and obviously great points that they make. But I think what this has really been, it's about the AWS moment, the supercharger. That's really what changed everything. In terms, I think investors now are starting to realize the sum of the parts of this story is starting to get realized. And even though the next quarter or two, margins will trough out in terms of, I think ultimately expand to Q4 in next year. But the supercharger, batteries, and of course AI. I think right now, not given credit from an AI perspective, which is why now you can maybe start to rationalize, is this $1.5 trillion or higher? As this all plays out in terms of the Tesla story.
Innovative and diverse, Tesla extends far beyond its reputation as an electric vehicle company, making it essential not to limit its value solely to that domain. Their comprehensive business model encompasses a robust supercharger network, energy ventures, AI autonomous driving technology, and an unparalleled battery ecosystem. To truly understand Tesla's worth and aid investors in making informed choices, each facet of the company deserves individual evaluation and consideration. Tesla investors have experienced a clamorous journey in recent years, with the company's shares reaching record heights of over $407 in 2021, only to suffer a major setback in 2022 when they plummeted by nearly 70% following Elon Musk's high-profile acquisition of Twitter. However, the year 2023 brings a positive shift, marked by a remarkable recovery as Tesla's stock price surged by nearly 150%, currently at around $260 per share as of today's recording, and with promising projections for further growth in the near future. Tesla has been actively reducing prices on its electric vehicle models, resulting in a surge in deliveries and reaching new record heights, thanks in part to the US government tax credits that buyers can capitalize on. Furthermore, investor optimism grew when Elon Musk announced a new CEO for Twitter, suggesting a renewed focus on electric vehicles. Notably, Tesla's stock witnessed a sharp increase in early May, driven by announcements from Ford and GM, stating that their electric vehicle owners would soon be able to charge at Tesla stations, prompting other automakers to consider adopting Tesla's charging network. According to Wedbush analyst Dan Ives, Tesla's recent delivery figures are seen as a significant and positive development for bullish investors. Moreover, there's a belief that Wall Street will eventually adopt a sum of parts approach when valuing Tesla, a method commonly used by analysts. This evaluation technique involves assessing the individual's divisions or subsidiaries of the company independently and then combining them to arrive at an overall valuation and price target for Tesla stock, potentially leading to more accurate consensus forecasts. Looking ahead to 2030, the potential value of Tesla stock is examined through 3 scenarios: a bear, a base case, and a bullish outlook. Presently, 100 Tesla shares amount to approximately $26,000 at a share price of $260. In the worst case scenario, the stock could increase by $2,500 by 2030, requiring the company to achieve 50% of its annual target of selling 20 million vehicles. To bolster this growth, Tesla is anticipated to expand its robotaxi operations, enhance its energy sector, and witness more companies adopting its supercharger network. Considering the base scenario, with Tesla stock reaching as high as $8,000, achieving the target of selling 20 million vehicles might be slightly delayed, possibly around 2031 or 2032. Nevertheless, by 2030, Tesla will be on the verge of hitting that target, and the anticipated release of the Cybertruck, already in high demand, will further bolster the company's performance. Additional factors contributing to this price target include more companies adopting Tesla's charging network and the introduction of a cheaper Tesla bot, likely employed in the company's factories for labor-intensive and high-risk tasks. These developments are expected to enhance Tesla's prospects, attracting increased investment from interested parties. Turning our attention to the bullish price target, it demands close consideration for long-term Tesla shareholders. In this scenario, a striking prediction of $22,000 per share is envisioned, though it may initially appear ambitious. However, several potential catalysts could contribute to this outcome. To achieve this valuation, Tesla needs to establish a substantial robotaxi fleet, license full self-driving technology, expand its energy business, and globally market the Tesla bot. These versatile robots might find utility not only in companies, but also in homes and offices. With these developments, Tesla's outlook holds the promise of remarkable growth and value. Suppose you currently own 100 Tesla shares. In this scenario, their value could range from $250,000 in a favorable case to $800,000 in a more conservative scenario, and even up to $2.2 million if Tesla exceeds expectations. However, predicting exact figures for 2030 is challenging due to market fluctuations and uncertainties. While revenue and earnings estimates can provide some insight, it's crucial to recognize that these price targets are speculative and not guaranteed outcomes. Various factors such as regulatory hurdles for full self-driving and robotaxis can influence Tesla's trajectory across different regions. As a Tesla investor, it's essential to conduct your own evaluation of the company and invest based on your individual outlook for its future. As our Tesla journey concludes, it's clear that the company's impact extends beyond electric vehicles. Their diverse business model, including the supercharger network, energy ventures, AI tech, and battery ecosystem, highlights the importance of evaluating each aspect independently. The ride for Tesla investors have been eventful, with highs and setbacks, but 2023 shows a remarkable recovery and a promising future. With active price reductions, expanded charging networks, and innovations like the Tesla bot, the company's potential seems boundless. As we look to 2030, various growth scenarios emerge, but caution is needed in this dynamic market. So, as you hold Tesla shares, evaluate them wisely for a sound investment. Will you remain bullish on Tesla? Let me know in the comments below. Thanks for watching. For more videos like this, click the link shown on screen. Remember to give us a like and subscribe to our channel. And as always, have a good one.